Semtech Corporation. It's currently sitting at $174.06. Over the course of the day, it was up 10.43%, and in the after hours, it is down 0.38%. In the last 5 days, it's up 6.43%. In the last month, it's up 11.45%. The last 6 months, it's up 132.05%. Year to date, it's up 137.11%. On a 1-year chart, it's up 325.55%. On a 5-year chart, it's up 164.26%. On a maximum chart, it is up. This is from August 15th, 1986. It is up 56,264.52%. God dang. Now look at this. This is what I find interesting. Now they got a negative EPS of negative 40 cents. Okay? A 52-week high of $177.35, a 52-week low of $40.25. Market cap of $16.28 billion, 93.15 million shares outstanding, and about 2,000 employees. Absolutely fascinating. All right. Perspectives from across the web. Semtech climbed significantly over the past month, reaching record highs in June 2026. This surge was fueled by record Q1 fiscal 2027 revenue and accelerating demand for AI data center optical connectivity. Analysts project continued strength in the next quarter, expecting sustained growth from 1.6 trillion copper and optical product ramps. Maybe that's 1.6 T. I'm not really sure. Record financial performance and beat. Semtech reported record Q1 fiscal 2027 revenue of $291 million, a 16% year-over-year increase that exceeded consensus estimates. The company achieved an adjusted EPS of 51 cents, representing a substantial 34% year-over-year rise, driven by record data center sales, which reached approximately $71.6 million. Accelerating AI data center demand. Management targets over 50% organic growth in the data center segment for fiscal 2027. This growth is underpinned by the ramp of 800G and 1.6T optical solutions. Okay, so that's 1.6T. I wonder what that means. As well as the introduction of new 224 gigabytes, isn't that gigabytes? No, GBPS per lane optical chips designed specifically for hyperscale AI infrastructure. Gigabytes per second. 224 gigabytes per second. Widespread analyst price target hikes. Following strong earnings, multiple firms raised their price targets in late May and June 2026. Notable revisions include Benchmark raising its target to $230 and TD Cowen increasing its target to $215, reflecting broad optimism regarding the company's positioning in the high-speed networking market. Wow. This is the bearish view. High customer concentration risk. The company maintains a significant dependency on a small number of clients, with its top 2 customers accounting for approximately 25% of net sales in fiscal 2026. This concentration exposes the firm to material revenue volatility if these specific partnerships are altered or terminated. Okay. Elevated valuation and overvaluation concerns. Despite strong performance, some valuation metrics suggest the stock may be overextended. GF Value Assessments recently labeled the price significantly overvalued compared to historical norms, while insider activity showed roughly $3.9 million in shares sold over the past 3 months. The Motley Fool, here we go. Marvell Technology versus Semtech. Which tech stock is a better buy in 2026? This is by Brendan Coffey at the Motley Fool. This is earlier today, June 22nd, 2026. All right. Investors searching for growth in the 2026 chip market often compare Marvell Technology and Semtech Core Choosing between these two depends on your focus on either high-end data centers or the expanding connectivity of things. Marvell provides the high-speed infrastructure necessary for artificial intelligence, while Semtech specializes in the chips that connect the physical world to the internet. While both operate with the broader semiconductor industry, their specific market focus and financial health differ significantly, making it essential to review the data before deciding where to invest. That makes sense. In the case for Marvell, Marvell designs high-performance components for the cloud where it competes among other semiconductor stocks for AI infrastructure dominance. The company maintains a concentrated customer base, with its 10 largest customers contributing nearly 82% of total net revenue in fiscal 2026. Two key customers, specifically one distributor and one direct account, each represented at least 10% of revenue. Customer concentration like this adds a layer of risk to the business, especially as large cloud providers explore developing their own internal chip solutions. In fiscal year 2026, revenue reached approximately $8.2 billion, representing a significant 42% increase over the prior year. This increase is a sharp departure from earlier periods, and it helped the company achieve net income of nearly $2.7 billion. For context, the company reported a net loss in both fiscal year 2024 and fiscal year 2025, showing a significant turn toward profitability as demand for AI infrastructure surged. As of its January 2026 balance sheet, the debt-to-equity ratio was approximately 0.3x. The ratio compares total debt to shareholders' equity, indicating that the company has a conservative level of debt relative to its equity. During this period, free cash flow reached close to $1.4 billion. Note that stock-based compensation accounted for roughly 34% of operating cash flow, inflating reported cash generation since SBC is a non-cash expense added back to cash flow. The case for Semtech Corp. Semtech provides specialized semiconductors and cloud connectivity solutions that support the Internet of Things and 5G wireless networks. The company relies on a limited number of customers, with its top two accounting for about 25% of net sales in fiscal 2026. This dependency creates material revenue risk if those specific partnerships are terminated or if their business operations suffer. Many of these contracts are short-term, leaving the company exposed to sudden order cancellations or shifts in distributor preferences. In fiscal year 2026, Semtech reported revenue of nearly $1.1 billion, reflecting approximately 16% revenue growth over the previous year. While revenue is trending upward, the company still reported a net loss of $40.4 million for the period. This is an improvement over the net loss of close to $161.9 million reported in fiscal year 2025, indicating the company is moving toward a more stable financial footing. According to its January 2026 balance sheet, the debt-to-equity ratio was approximately 0.9x. This indicates that for every dollar of equity, the company has about 90 cents in debt. Free cash flow for the year was $171.4 million. Note that stock-based compensation accounted for roughly 34.1% of operating cash flow, inflating reported cash generation, since SBC is a non-cash expense added back in the cash flow statement. Risk profile comparison. Marvell Technology faces significant risk related to its customer concentration and geographic footprint. A major portion of its revenue comes from a few distributors and direct customers in the data center market, making it vulnerable to shifts in their spreading geopolitical tensions. Vulnerable to shifts in their spending. Geopolitical tensions between the United States and China also pose a threat, as trade barriers and export controls limit sales and disrupt supply chains. Additionally, the company relies entirely on third-party foundries for wafer fabrication, meaning any natural disasters or political instability in those regions could cause major disruptions to its product supply. Semtech deals with similar geographic and customer risks, with its assembly and test operations located in China, Malaysia, Taiwan, and Vietnam. The company is sensitive to general macroeconomic conditions, where inflation and high interest rates can lead to reduced commercial spending and inventory corrections. Integrating past acquisitions remains a challenge that could divert management attention to lead to future asset impairments. Like its peers, Semtech must also navigate complex and evolving export control laws that increase operational costs and impose risks of regulatory fines. A little valuation comparison. I've got a little graphic for you. Comparing these two companies on price, Semtech appears to be the more affordable option based on its lower multiples relative to future earnings estimates and revenue. The forward PE and the price to sales ratio. So, the forward PE for Marvell is 76.9x, and the price to sales ratio for Marvell is 31.1x. Semtech is 61.7x and 13x, respectively. And the sector benchmark is 37.6x for forward PE. Okay. Back to the article. Which stock would I buy in 2026? Both Marvell Technology and Semtech Core are expecting excellent growth this calendar year, which covers most of their fiscal 2027. Both businesses are enjoying a stiff tailwind, a demand from data centers and hyperscalers. Marvell expects its fiscal 2027 revenue to rise 40% to $11.5 billion. This comes after reporting a first quarter that grew 28% over the first quarter of fiscal 2026. Marvell recently announced a partnership with NVIDIA Core to deploy Marvell's optical, networking, and custom silicon capabilities with NVIDIA's ecosystem to create custom AI data center solutions. Not only is AI demand rising, but users are also using AI in ways that require more chip power, such as asking multi-part questions that require the LLM to send off queries across different parts of its system. Marvell and NVIDIA will seek to optimize hyperscalers' equipment options to meet such needs. Meanwhile, Semtech is expected to see its hardware sales grow by more than 30%, primarily from AI hyperscalers. For fiscal 2027, analysts see Semtech generating $1.37 billion in sales and swinging to a net income of $152 million. This comes after a first quarter fiscal 2027 that saw Semtech's revenue rise 18% to $291 million, with net income of $26.6 million. Both businesses are showing strong growth driven by demand for AI. Marvell, however, shows much healthier profit margins, which bode well for the business in the long run. It could deploy its cash for acquisitions, share buybacks, or increased research and development, all things that would strengthen the outlook for shareholders. Marvell Technology commands a premium compared to other stocks, but sometimes investors need to pay up for quality. That's according to Brendan Coffey over there at The Motley Fool. How cool is that? So let's go right up here to the analysis. We've got 13 analyst ratings over the past 3 months. We've got 11 buys and 2 holds. Pretty cool. On the 12-month forecast, we've got 13 analysts giving 12-month forecasts here. The highest one is $230. That's a 31.63% increase. The average one's $205.73. That's a 17.74% increase. And the lowest one's $175. That's 0.15% upside from here. Let's have a look at their earnings here. So they reported on May 26, 2026. They beat on EPS by 12.5%. They were predicted to get 45 cents. They got 51 cents. They also beat on revenue. They were predicted to get $283.53 million. They got $291.02 million. That's a 2.64% beat. Let's see if we can see if they've missed lately. Not lately, but back in Q4 of 2024, they missed EPS by 34.68%. So, pretty good. But they missed before. They missed at one point. Hey now. We don't go down no further. There we go. Look at this though. Q1 2025, they beat by 2,900%. That's crazy. Very interesting. Let's ask Gemini a question. What does Semtech do? Answer in one paragraph. Semtech Corporation is a leading technology hardware company that designs and manufactures high-performance analog and mixed-signal semiconductors, advanced algorithms, and cloud connectivity solutions. The company is best known as the pioneer and developer behind LoRa, a long-range, lower-power wireless networking platform that serves as a foundation for global Internet of Things systems, enabling smart utilities, asset tracking, and smart cities. Beyond wireless LOT connectivity, Semtech creates high-speed optical and signal integrity components vital for routing data within AI data centers and 5G infrastructure alongside specialized circuit protection devices that shield sensitive consumer and industrial electronics from sudden electrical overstress and static discharge. Man, so many questions. So many questions. Who are their biggest customers? Answer in one paragraph. Semtech serves as a heavily business-to-business customer base, relying heavily on global electronics distributors like Arrow and Avnet, alongside direct partnerships to reach global equipment manufacturers. Because its hardware spans multiple distinct industries, its largest end users include industrial LOT and smart utility giants like Itron and Landis plus GYR, who use Semtech's LoRa chips for global smart grid and water metering deployments. Tier 1 cloud hyperscalers and networking infrastructure companies like Cisco and Arista, who purchase high-speed optical platforms for 5G networks and AI data centers, and premium consumer electronics manufacturers, who source circuit protection for smartphones, wearables, and laptops. Geographically, its largest buyer footprint is concentrated in the Asia-Pacific manufacturing hubs, alongside major enterprise and data center accounts across North America and Europe. Okay, guys, that's enough. That's enough. We're getting too into the nitty-gritty here. So we got Semtech here. It's up 10.43% today. And year-to-date, it's up 137%. And then on a one-year chart, it's up 325.55%. Very interesting stock. Let me know what you think, guys. It's your cousin Dustin. Thanks a lot. Check it out next time. All right. I gotta go to work, for real. Goodness gracious. I'm taking too long.